Did you know you can get a copy of the Edge Finder completely free with our sponsor, 8cap? 8cap is a super well-known brokerage that has been in the game of CFDs for a long time. And if you are interested in switching your brokerage to 8cap, they can actually purchase a copy of Edge Finder on your behalf, making it completely free for you. This is an offer our team has worked out to make the Edge Finder a completely free to access tool if you move over your account to 8cap. Here's how this works. It's pretty straightforward. If you head over to our website, a1trading.com/8cap, you can explore this offer in more details, including all the terms and conditions. But basically, the high level idea is if you create an account through that specific page and you meet the deposit requirements, 8cap will effectively buy a copy of Edge Finder for you. Now, please note this is unavailable to US traders, but for my friends outside the United States who trade CFDs and you like the brokerage 8cap after exploring it on this page that is linked below, then maybe you consider taking advantage of this offer. We've had a lot of people do this and it makes the Edge Finder completely free, which is a hard price to beat, by the way. It doesn't get much better than free. And it's a win-win-win. 8cap gets a new client, you get a great brokerage, as well as access to our software, as well as other stuff on that page. You can get access to free memberships with us, Stockbox, etc. at no cost to you. You just move over your trading to 8cap. So the full details and terms and conditions can be found on this landing page, again, linked in the live stream chat or in the description down below. Please also make sure to do your due diligence to make sure that 8cap is a good fit for your trading and meets all your criteria for what you're looking for in a brokerage. On this landing page, you can explore the different product offerings that you get access to from our store completely free if you deposit certain tiers within this list. And the cool thing about this multifaceted offer is that even if you have a lower capital basis, why not move your account over if you like the brokerage, you like what you see there, and get something for free out of it. I think this is a really cool offer that they've set up with us, and it is sort of a co-branded offer by 8cap sponsoring A1 Trading. So check them out. Again, all the information can be found on that landing page, a1trading.com/8cap, or found in the description or live stream chat below. Thanks to 8cap for sponsoring. Now back to the stream.
Today's the big day. We have got SPACEX. SPACEX is on the docket this morning. We've got a good number of people tuned in here today. It's going to be a big day. Once you get SPACEX trading publicly, and I did a little bit of research as to when it is expected for shares to begin trading, has anywhere between 10 a.m. to like 2 p.m. So I don't know exactly when the shares will be tradable. But it will be an eventful day, to say the least, because the amount of pent-up energy, probably in both directions, people who want to sell their shares or buy shares. Of course, if many people who have been a part of SPACEX, early founders, investors, etc., will have the option for the first time to sell their shares on the open market to the public. And meanwhile, the public will have, for the first time, easy access to buy shares themselves. It is a ton of interest. I believe the share price is expected to come out at $130 starting. Am I looking at this right? Oh yeah. Okay. So there's nothing here. That's why it's defaulted to gold's prices. I was like, okay, we're not going to $4,000. Maybe we are. You can never say never. That would be an insane day. But also think about what that would mean. $130. If you wanted to double, you're talking about it like becoming like a, multi-trillion dollar company in a day. So my doubts are high. Like my skepticism is like just ringing alarms right now. I think that what I'm going to say here is I think consensus, but still what I think is likely to happen. Shares come out. This is not financial advice. This is my prediction. Maybe I'm dead wrong. Shares start trading, immediately a pump. Then a dump that lasts for 6 to 12 months. And then past that point, that's my prediction. So this is the 12-month mark. This is the 1 month mark. I mean, this is what I think is likely to happen with the SPACEX IPO. I think you're going to have a significant amount of 10-year veteran investors who have owned the company. They own huge swaths of the company. My educated guess is that it's going to pump on initial offering. It's going to then be a dud for 12 months. And then I think it's a buyable stock. That's like my opinion on it. Do not do what I'm saying or take what I'm saying as financial advice. It is my dumb, worthless decision. Don't take any, like people are going to get hurt on this SpaceX IPO. People are going to short it. They're going to buy it. They're going to make silly mistakes because it's a huge it's a volatility event, right? And people love to just go like essentially speculate on what's going to happen. And it is speculation. Like it's a company that doesn't make money. And anytime you enter that territory, it's speculation to the max. I'm not saying that it can't be. I think SpaceX is going to be a beast. Like in the long term, I think it's a company that speculative, yes, but sort of like Tesla in the sense that they're doing something. They're entering a marketplace before other places or other companies. They are expected to take swaths of the space marketplace by storm. The question is, how much money is there to be made there? How soon can they make that money? How much investor capital are they going to burn through before they make that money? Meanwhile, there's three companies in one here. There is the actual rockets business, which is the super, unprofitable. Or I'm sorry. The launching satellites business, which is a profitable entity, I believe. Then you have what's the Starlink, which I'm using right now in my house. Starlink, profitable business, but then it's XAI, right? The AI super story is what I don't even know if people know what they are or not buying with SpaceX. Like the mega risk to it is that it's a cash burning company. A lot of these big businesses are XAI, OpenAI, Anthropic. In order to gain the market share, they're all racing to just spend like crazy to get users, corporations, enterprises on their platforms, right? And so what that means is they just burn money. And so here's my opinion on the whole AI thing. I continue to think, just from my little world here, I don't pay for data center build outs. I do pay for some subscriptions on AI related stuff, but my business has benefited leaps and bounds from AI without spending an arm and a leg. These companies are spending an arm and a leg building it. My opinion is that the companies using AI to leverage and scale their business, scale their efforts, scale their outputs, I think those are the real winners in the long story. That's my opinion. So I actually have a position in small cap stocks for the longer term that I like. I think it's IJR's ETF. Yeah, I have IJR shares that I bought during the April sell-off, the March and April sell-off. And this is doing phenomenal. But I think that like this has, to me, the story for AI is more attractive in small companies that are not necessarily the ones building the AI platforms, but rather the ones leveraging them. That's my take on it. Software companies, I also like for that reason. I am like A1 Trading, we're a software company. And we're leveraging it like crazy. Like it has helped us to take our tools to the next level. So that is my personal anecdotal evidence for why, they say invest in what you know. I run a software business. I'm in the content game. For me personally, I like the risk reward on the ones leveraging AI more even than the ones building it. So for SpaceX, XAI, Grok. Hey, I like Grok. I use Grok all the time. I'm still just not, for me, it's not something I want to go chase right off the rip. Do I want to short it? Not really. What am I most interested in today? I'm interested in how the market receives it. It's a huge amount of money that needs to be funneled into a new player at the table, SpaceX. Where's that money coming from? How does the market respond to this need for more money, especially when we have a lineup of big IPOs behind this, right? OpenAI and Anthropic. How does the market respond to this need for money, this kind of ever-growing shrinking of free cash flow for big businesses piled into paying and investing in build-outs, data centers, LLM stuff, right? My opinion, I'm a little skeptical. I'm a little cautious. Here's a look at where we are with the NASDAQ. NASDAQ, we talked extensively about this kind of study we've been doing. Swing high, swing low, about an 8% pullback. Could that have been the pullback that we are all going to get? Like, is that all we're going to get? Possible. From a technical analysis perspective, I've been kind of pretty much watching the 50% retracement of this move. If you close decisively above, I know I'm repeating myself. If you're an everyday viewer, bear with me. If we get this kind of move today, like if we close above 61.8, I think we're probably going to see fresh all-time highs. However, if you close below the lows here, if we close below the lows here, if we fade on the SpaceX rally, a little bit of inflation on the rise, rates going higher, uncertainty in the Middle East, which I think, by the way, geopolitics are still going to kind of take the stage at any moment, I think. Anyways, watching this level here and watching this level here. Okay, those are sort of my spots, right? In both scenarios, from a short-term price action perspective, I would kind of yield to what Flo is saying there. So like what I mean by that, again, you break through here, that looks positive. That looks like we're probably going to advance higher. And a break through the lows looks like we are likely continuing the pullback into something larger. Okay, that would be from just the technical analysis side of the NASDAQ, what I'm looking at. Now, from a macro perspective, from a hype perspective, I'm kind of like cautious with the SpaceX stuff. Like I remember 2021, 2022, everyone getting hyped up about space stuff, and it ended up being like 90% drawdowns for a bunch of stuff. So I'm a little seasoned in that regard to seeing space stuff be very popular and then absolutely crater to, you know, it's look like we're going to the moon and then we crater underneath the earth and go the other way, right? Like I've seen that story once before, so I'm like, okay, let's just be cautious with it. You know, that's how I'm going to take it. Anyways, part of the reason I'm going to just go real quick. NASDAQ's got a +0 score, so I'm neutral here, right? Like I'm not taking longs, I'm not taking shorts from a swing trading perspective. If we continue to see the stock market pull back, there are some areas that I might be more interested in longer term position trades on, but not anything of pressing urgency here today. NASDAQ's getting a neutral reading. We have some inflation that's sticky. We simultaneously have solid growth versus expectations. That's positive. Jobs market data has impressed recently versus expectations. And so, you know, I'm kind of mixed here. From a technical perspective, like I said, you break higher, then that's going to probably look short-term positive and we could see fresh highs. And I know I'm kind of sounding like, well, you're saying it could kind of go either ways. I know I don't really have enough bias, long story short, to take trades in the NASDAQ. Let's get a little bit more interesting. Let's talk about silver. So silver and gold. Silver's got a -3. Let's look at gold. Gold has got a -5 reading, which is going to tilt into into bearish territory. So, by the way, check out this new layout we've got set up on the page. Hey, that kind of goes nice with Edgefinder. That purple color looks really cool. We are compiling some really cool prop firm tools for you guys, like free stuff to help better find the best current discounts, opportunities. We're building a comparison tool right now. Team is busy, but we're trying to put together some stuff for the prop industry is just taken over. We are trying on our side of things to help traders to find best current discounts. If you scan this QR code, it will take you to our website. Like I said, stay tuned on the site. We are building and overhauling all sorts of powerful tools to help traders find better discounts on prop firms, to manage their drawdowns. Can I show you guys something real quick on the website? This is totally free, by the way. This is kind of hype. Check this out. Go to our website. Make sure you favorite the page. Come back here because I'm telling you what, like, we are going to build some crazy free tools for traders. We've been just like overhauling our site. Check this out. We just added a prop firm drawdown calculator because so many traders who get prop firms, they end up like blowing it because they just kind of like miss a rule, or they get confused on something, or they overdo some sort of size on their trade. This calculator, completely free to use. Punch in your account balance. You could your simulated capital account. Put in your details. It will help you find the right size. We have one for CFDs and Forex. We also have one for futures. So you can calculate your sizing, etc. These are all free tools. Just go under tools. We have all sorts of calculators, position size calculators. As long as I can remember, you've always had to pay for. We're making them free on our website. So we also have a bunch of macro and sentiment data dashboards that are completely free to use. So head over a1trading.com or scan the QR code below, because when I say we are working on this, I worked almost until midnight last night just working on some tools and stuff on the site. Like I'm pumped for it. We're going to build some really amazing stuff. So help us out. If you support the show, head over to our website and explore the free tools. And of course, they're free because we rely on sponsor slots. Like sponsors are on our website, they're on our stream. And so we can offer free tools, and, those slots from the sponsors that we are offering give us a chance to kind of make up that, free tool offer to the public. Does your position tool work well with gold? Yes, it does. We have futures, we have gold, we have Forex. And again, the price is free. So literally just go bookmark the page. Like the stream, guys. Yeah, thank you very much. Okay, so let's move on to gold, because I was talking about that for a second. I think gold continues to be in a funk. Let me map out my thesis here. So if I'm looking at gold's getting a -5 bearish reading within Edgefinder. A lot of that score is coming from macro. And the Edgefinder is admittedly pretty tilted in favor of what macro is saying, as I think it should be. Like it's leaning in favor of what macro, like this is our scoring rubric, right? Notice how maybe 3/4 of the page scoring breakdowns are all about economic growth, inflation, jobs market data. That's intentional. The Edgefinder, I think most traders know how to mark up their charts, mark technical support levels, put a stop loss in. Like most traders know how to do that. What we specialize in is automating the process of going through all of these economic data points that you know from forexfactory.com. You see the red folder events, but what do they mean? Well, our tool automates the actual interpretation, calculation, and summarizes it using its internal kind of proprietary bring it all together algorithm. So when we look at gold right now, we have inflation on the rise, which we know is in the short term, let's say next few months, a bearish catalyst for gold. Why? Rising inflation means the Fed will need to keep interest rates elevated or even hike interest rates higher. Hiking interest rates means currency, having cash, becomes more attractive because investors who have cash can earn yield on that cash. If you hold gold, what yield do you get year on year? Nothing. It is a rock. It's a metal. It sits in a drawer and does nothing. Now, granted, when interest rates are really low and you don't get anything for holding cash either, people run to gold, right? So when they cut interest rates, that's why gold goes crazy. People are like, oh, well, I'm not holding cash. Let me put it into gold. But then when the other case becomes true, when the crowd sentiment, when the crowd wants some sort of yield because dollars are going up in value because holding cash or putting it into savings accounts, CDs, US government bonds, like they're offering yield. Like you can go get 4, 5, 6%. Like if you can get a yield on your cash, that becomes a more attractive offer than buying metals while they continue to sink lower and lower and lower. Does that make sense? Does that concept, because that really, I explain that almost every day because people always have that question. In fact, I've had people really mad at me in the past. They're like, Nick, you're wrong. You don't know what you're saying. Inflation is good for metals. Yes, if you're looking macro long term, yes. If you have a decade in which inflation is elevated, yes, metals will look really good because everything will go up in price in a high inflation environment that is a physical good or commodity. But in the short term, it's different. Short term, a spike in inflation, which means the money supply expanded or whatever. In the short term, the Fed goes, oh, rate hikes. And rate hikes make all that the tightening around currency dramatically go the other way. And remember, gold loves a good money printing story. Money printing story, that's amazing. That's exciting, right? Not a money printing story, the opposite, makes gold less attractive. So anyways, I do still maintain for now, with rising inflation, rising interest rates, economic growth that seems decently better than expected. Now, again, another one that triggers people is when I say the economy is good. I'm not saying the economy is in stellar condition. What I'm saying is that the jobs market and the economic growth data that we monitor has recently been beating Wall Street estimates. That's all, right? We don't care about necessarily now. If you're a long-term investor, this is where we want to look at the actual values, right? Where is inflation at, et cetera. But if you're a trader, you want to look at the actual data versus the forecast. So you say, well, okay, manufacturing and services PMIs, which are forward-looking indicators of the state of the economy in services and manufacturing, they have recently been beating expectations. Check out your surprise column here. Positive surprises versus expectations. That is positive in terms of the dollar. So how does that impact gold? Not so good, right? So I lean more on the bearish side of gold. Of course, you can select anything from our list here. We've got US dollar continues to look strong in my view. We are sitting at a support level though. So from DXY connoisseurs out there, we're watching to see how price reacts here. Yesterday, you had a big turnaround on geopolitical headlines. Trump saying, basically, we're going to not do the attacks that he had said he was going to do, reversing that order or postponing it to see if there's going to be another round of negotiations or whatnot. Anyways, the dollar in the response to that dropped sharply, but is still sitting at a support level. I think if you watch NASDAQ, if you watch gold, et cetera, the dollar right now matters a lot. Because if the dollar blows out through 100.5, it's going to be a pain point for investors in precious metals and in stocks. Okay. So if you're watching stocks, keep one eye on yields in the dollar. Yields generally continue to trend higher. Although we did get a sharp push lower. I think if you break these lows, that starts to show a little bit more cool off in the rate hike story. But right now we do still see supported yields for the most part. Suggesting higher yields suggest rate hikes. They suggest, a tightening in monetary policy, which is historically not a wonderful circumstance for stocks. That being said, NASDAQ, like I said, very, very strong rebound yesterday. We are keeping an open mind. We are currently sitting between the 61 and 38.2% retracement of the big drop, right? So you had the big drop. We've recovered. The question is this a up and over type of situation like we discussed earlier in the stream, or is this a down and out, right? Are we going to see the follow through here? And again, I don't really have a strong vindication one way or the other on the NASDAQ right now. When I go to my macro scanner, kind of mixed here, right? Inflation's on the rise, economic growth is strong versus expectations, and jobs market data is better than expectations recently. The non-farm came in 172 versus 85K expected. Weekly jobs claims were a little high. That was not as positive, but ADP and job openings also beat expectations. So we have a situation where, okay, you have some mixed macro, slightly positive for stocks, but really what's holding us down is the technicals look a little bit mixed and sentiment We saw institutionals doing some selling, as well as mixed positioning overall. Just a real quick check on the crowd sentiment also. Let's just look at our put call ratio here. Yeah, so put call ratio came back in a little bit. We went from seeing a huge preference for buying puts, bearishness, to now a little bit more neutral. So I would also watch for the other extreme now. Like if you get this move where people start to get euphoric buying calls like crazy again, I would actually take that as a possible, moment that the bears would step back in. You've had a nice recovery in sentiment naturally just because of the one-day big up move. So I would just keep an eye on that. The last few days, we had seen huge put demand as we entered into the low point. Interestingly, so often is the case, you get these big, really sharp one-day moves lower. Everyone runs to the put side. They buy puts, right? They bet against the market. And that oftentimes in the short term causes some kind of reversal in sentiment very quickly, right? So now I think everyone bought puts, betting against the market. It's going to go lower. Oh my gosh, we're going to die. And then boom, one day. And a lot of those puts just get like waxed. They just get wiped out. It doesn't necessarily mean we're shooting through the highs. That's not what that signal is telling you, I think. I think it's more like, okay, that's going to flush out some of the weak hands, if you want to call them that. And I think that where we go next, like now that you've kind of had that flush out, the question is, where does the strength lie next? Again, we're keeping an open mind because I don't have a strong preference on NAS right now. Where I do have strong preference, as I've discussed, is the metals. I continue to think that they probably move lower. Unless you get some sort of announcement of the end of the war, then it's kind of like, okay, we've got to totally reset. And when I say announcement of end of war, what I mean is both parties, both sides acknowledging and signing or agreeing that the war is over, right? Not this one side says and then the other side says, but rather kind of all in one. Guys, we've got 655 people watching between all the different locations we are streaming right now. If you're enjoying the show, do us a huge favor here. Hit that thumbs up button, subscribe. SPACEX IPO today. We don't know when. The ticker symbol is SPCX. We don't know when it will begin trading exactly. The US stock market, it's not going to be a 9:30 open, so just heads up on that. I know a lot of people are going to probably be like, is it going to start trading in 1 minute? No. SPACEX is going to start trading today. We just don't know exactly when. So I imagine a lot of you guys who are watching the SPACEX hype are going to have this symbol up all day checking it, like I will. But yeah, we are going to probably see it somewhere in the next few hours, 10 a.m., I think. Someone says 10 a.m. Does anybody have info on that? I believe, I think I saw like 12 p.m. or 1 p.m. So we'll see. How's your silver position? Yeah, it's going all right. It's going all right. We've got, I'm still short. I'm shorting, as of a week and a half ago or so, still in the position. If we break through this level, it's time to call it quits. We had obviously the big one-day rally off of the enthusiasm that the Iran strikes from the U.S. were not going to be followed through on. That, of course, excited the metals because it's like, okay, oil's not going to blow out and become a big inflationary problem, or at least that's the probabilities changed. So we saw silver and gold both rip last night or yesterday evening on that news. And then now the question becomes, where to from here? I think you have resistance overhead. I generally still favor the downside in metals, but I'm open-minded. So if we rip through this level, I take profits on the trade and I'm all out. Let me just see if I can show you the P&L on that. I'm going to pull it up on my broker on my other screen here. Where are we? Okay. Hold on. Getting my P&L thing just so we can check on I've been showing the P&L throughout the whole process. So I'm going to try and stick to my okay, does that work? Yep. Okay. Yeah. So at one point, this position was up $20,000. At this point, it is now up $15,000. Prior to this SLV position, we had a gold position that I lost about $5,200 on. So full context is key. I think being transparent is cool. So I lost like $5,000 on a previous gold short. I am now sitting in silver shorts that are working out really well. And even if this position does not work from here, meaning like, let's say it completely starts reversing course, then I'll still walk away with a really nice profit. So I'm in a win-win circumstance with silver. If we roll over though, if we see, some kind of big moves today in a negative fashion in terms of silver and gold, but also SpaceX has potential to move everything. And also the Iran stuff. Like it's very hard to know exactly how that's all going to play out. But anyways, yeah, I have an open mind. If we break through structure, I'm out of the trade, taking profits on that. By the way, guys, if you're looking to get funded, check out the QR code that is below the screen right now. We've put together a list of really great offers and discounts that we are finding from our sponsors. So explore it on our website, scan that QR code, and our discount codes will get you some nice discounts on various props. So check that out. Guys, up next, we have Bloomberg News earlier stated 10 a.m. Okay. So I'm going to keep an eye on it. I might come back at 10 a.m. just see what's going on with you guys here. We're going to pass the show on. We're not done though. We've got another show host starting up next, guys. We've got 684 viewers here as we are speaking live. If you are enjoying the show, hit that thumbs up button, subscribe. We've got hype going on for this big event today, and we're going to be covering it. We're going to keep the show rolling here and try and keep some coverage on what is the world's largest IPO ever. Countdown to SpaceX starts now. Up next, Alan Perez. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
My apologies, mic is muted. Good morning, everyone. Good evening, good afternoon, wherever you guys are watching. We have a lot of new viewers here today. I'm seeing the chat. I'm seeing some new viewers here trying to ask questions on gold and stuff like that. So I'll definitely make sure to go ahead and address that for you guys. Can you guys hear me okay? I know Arso there says that you can't hear me. I think you can now, but just go ahead and let me know if you can or not. Good evening. All right, Carlos. Awesome. Cool. Big day today. Humongous day. We have SpaceX, one of the biggest IPO in history. In fact, I have some fun facts here for you guys on the stream that I was kind of compiling here. But they're going public at a 1.75 trillion valuation. That is 2.5 times larger than Saudi Aramco's previous IPO record. So they hold the previous record. Now, just to give you concept or context on the size of this thing, at 1.75 trillion, SpaceX would be bigger than Berkshire Hathaway, Tesla, and Saudi Aramco combined. So it's a big one. It's a very big company there. So very, very big company. You're getting multiple companies in one. For those that don't know that, like, it's SpaceX. You're getting the space exploration piece of it, but you're getting Starlink. You're getting XAI. And SpaceX alone burns through $9 billion in cash in a single quarter. In a single quarter, that's like what most companies or big companies make in a single year. So they burn through that in a quarter. So yeah, very, very big company, lots of cash being spent, but a very big mission, a very big goal to achieve. So very, very cool. They are not trading as of yet. So usually there is a ceremony to be taking place, and then you can start trading SpaceX. So as of now, you can't trade the asset. I actually looked on the NASDAQ here to see, or not the NASDAQ, I'm sorry, the ticker SPACEX SPACEX. And it's nothing there yet, so we'll wait on that. So of course we'll be live streaming throughout the morning, and so eventually that ticker will become live, and then we'll actually be able to see the price action live. And I think Nick mentioned that he'll be hopping on here just to kind of go over it with you guys. But very, very big company. I'm gonna be more of a spectator, I would say. I'm not going to be trading this thing live by any means, just because I have no idea how it's going to go. No idea how it's going to interpret it. There's two sides of the coin there. There's people that are super optimistic, and they say that this is such a big mission and a big company that, it's bound to go higher. And then the other side of the coin is that people are saying that this is just exit liquidity for the insiders that have been investing for 10 plus years already. So we'll see how it happens. I actually agree with Nick too about his kind of forecast there that he gave. Where let me go ahead and pull up the Epic Pen for you guys, so I can do the same thing here. If I'm not mistaken, this was kind of his forecast here with the IPO. So it was going to be more so. Let me see. Epic Pen's not working. It was going to be more so like a little bit of a pop, correction, and then you start trading higher. I kind of think the same way as well. I think that. So I'm going to be watching. I'm going to spectate. It's going to be fun to watch nonetheless, whether you're trading it or not. So that's kind of what I'm looking at. But let's go ahead and start looking at, other trade setups while we're waiting here. Let's look at some other asset classes. So let me go ahead and catch up here with the chat here. Good morning, everyone. Good to see all the regulars in here. Awesome. Burn says, sell everything but SpaceX. Either we go to the moon or kaboom. Kablow. I don't know, man. There's a lot of people, I'm sure, Brand, that are on that boat. They're willing to go all in on SpaceX. That's not me, man. That's not me. I was reflecting on the conversation that Nick and Chris had, and there was a chart that they shared, but Chris shared the chart. It was basically the drawdowns after a big mega IPO, and that the drawdowns were about 20, 30%, maybe 40%, if I'm not mistaken. And then, there was some outliers in there with really big gains, right? And so when you use the law of averages there, those really big, gainers, those winners are what holding it up to 20, 30, 40% drawdowns. But if you take those big gainers away, the drawdowns were actually a lot worse. So, keep that in mind. And so I think that, there's going to be a lot of people that are overcrowded jumping into this thing, and then you're going to have a correction to be made. And then, you can add SpaceX, right? But indirectly too, everyone, if you're investing in the index, you're going to have some exposure to SpaceX. So it's not like you're not investing into it. It's just, getting into the single stock. But that is just my take there. Tiger says they've got Elon's Rocket Man playing at the ceremony. Spot on. Awesome, man. Yeah. I'm sure it's going to be a very cool ceremony. I wonder if it's being live streamed as well. Mass of whatever says, is the market open? It's open right now, but SpaceX is not on there. Mass, you are not the only one in here, my friend. So we are streaming on various different platforms. So I can see you're on Twitch there, but we're streaming on YouTube, Instagram, I think, Twitter or X, a lot of different platforms. So you're not the only one in there. But if you have any questions or anything, if you want to contribute to the chat, just go ahead and type in there, and I'll be able to see it. Love from the Philippines. Awesome. Rabies is the Rocket Mac. Okay, Rafael has a question. Do you think NASDAQ could start dropping next week after the IPO? I think it's a possibility. So Rafael, let's go ahead and dig into this, right? Let's go ahead and just consider this and think of the possible scenarios, and also consider the macro as well, because that has everything to do with the price action, right? So the current theme right now, you have elevated. Well, the reason why the NASDAQ has been kind of trading lower recently, right? You can see this price action here. If you go to a 4-hour chart, you can see that the NASDAQ is actually kind of trending lower here, right? Any pop gets faded. Why is that? Well, it's the war in the Middle East, and the results of that is higher inflation, and higher inflation means higher yields. And so higher yields is pricing in that central banks around the world, and in the US, of course, where the NASDAQ lives, are anticipating higher rates, right? And so that is not the best for stocks. And so that environment has been, shooting this thing lower. Now, I think from over here, from the war lows to up here to the recent all-time highs, The market was front running the idea that the war is going to end eventually, and that the base case, which is the Fed holding rates, is going to stay intact. And I think that was the case. And I think that's why markets were rallying despite elevated yields, elevated price of oil. And then you had this big red candle here, this Friday candle, this non-farm payroll candle that showed that the labor market was actually in good shape. And so that spooked the market because they had to now realize the fact that the Fed can raise rates if they want to, right? So if we reflect back to the later part of last year, right, the Fed had the inflation problem. You know, it was one thing on their mind. However, they have a dual mandate, which is stable prices and maximum employment. And so because the labor market was not as strong, that was a risk for them. So that is why this time around, the labor market taking care of itself actually gave the Fed a green light to go ahead and hike interest rates if they need to. We've seen some inflation figures in recent times that inflation is definitely elevated, and so that's only added to that story. And that's why you're seeing some recent price action and equities trending lower. So to answer your question, do you think the NASDAQ could start dropping next week? Well, I think that if the IPO is like lackluster or whatever, or it's just whatever, if it doesn't have a huge influence on the NASDAQ, and we just consider and remember the current landscape that we're operating in, which is higher yields, higher inflation, then I think that the NASDAQ could continue its momentum to the downside. Now, you do have another thing that you have to consider, which is the war in the Middle East that is now up in play, right? You do have essentially headlines, which we've gotten them many, many times over. So take this with a grain of salt, but you've had headlines that are saying, the war is over this time. Right, we have agreements, and they're going to meet in Geneva on Sunday, and they're going to sign something. If you were to get something like that, well, then I think there's going to be some risk appetite, and so that plus the SpaceX IPO could take the NASDAQ higher. So in summary, I think that if you have no end to the war, right, it's just the same old thing we've been seeing, then I think NASDAQ is lower. I think so, and also just considering that if the SpaceX IPO doesn't hold it up too much, I think the NASDAQ is lower. However, if you get a resolution to the Middle East, if you get yields lower, the dollar softens a little bit, then I think NASDAQ is higher. So just remember that it's I try to keep it as binary possible, but if you see yield, oil, and dollar stronger, probably weak NASDAQ and the S&P, vice versa, strong NASDAQ and S&P. So just keep that in mind. Cheryl said, saw a post on SpaceX. I'm sorry, I'm getting to this late. Cheryl saw a post, the SpaceX IPO will be quoted at 9:50 a.m. today and will begin trading at 10 a.m. Okay, wow. So very, very soon here, guys. So we'll definitely, as you guys are watching to the stream here, you'll definitely be able to see that price action. So please stick around. If you have any questions or anything, always feel free to put them in the chat and we will do our best. Simo, actually, great question here. I was going to get to that. Did I close the trade or not? So update on the trade here. I got stopped out of Eurodollar and silver. So with silver there, I was not filled in at the best price like I was Nick, right? So I think Nick is filled somewhere over here. I was filled over here. So I definitely got stopped out there. I was able to manage. Well, I didn't get stopped out. I saw what was happening. I was able to manage my risk and reduce the losses a little bit. So I'm out of silver and the euro. Now, I added a little bit of a hedge, which is a little bit counterintuitive, which is long gold at very, very low size here. You can see 0.06 loss. So low size. And I have my stop losses right below these lows here. This is just a hedge. And I'm not saying that I know this is going to happen because I really don't know. But again, I want to make sure I'm covering all things, right? This is a hedge that if you do get some kind of a resolution to the war, then I can participate in gold appreciation. I think personally that if you get the end to the war, you will see what you saw yesterday, which is yields start to drop. You would see the dollar soften, and I think that would benefit gold. It would benefit anything against the dollar, and it would benefit equities in the short term. I think in the long term, you still have the inflation story that needs to get under controlled. And so at that point, any rallies I'm looking to fade. So I know it sounds kind of weird, right? I'm putting on this hedge, but it's a very short-term hedge, and I'm looking to flip positions. I understand that, but just kind of my thought process there. Same thing with the Eurodollar as well. I was able to manage those losses very, very quickly there. And we are now at another level of resistance. So we're going to see what happens, come Sunday. If you have no resolution, I'm going to continue with my same old trade that I've been doing in the past, short dollar, and just keep milking that trade until it no longer gives me anything. But currently I'm not on Eurodollar anymore. So if there is a resolution, I do expect the euro dollar to go ahead and give a little bit of a pop, and then I'll probably short it right here at that 200-day moving average where this level of resistance lies. Marco, man, I'm so sorry I kind of kept going on there. How you doing?
No worries. I'm doing pretty well. Excited. We have 15 more minutes, and then we should get at least something from SpaceX. I know there's an auction before the actual release of the price. So there's like a silent auction which lasts 2 to 3 hours usually, which means we may not get the price in 15 minutes, but maybe in like 3 hours. But the Hyperliquid website that tracks the IPO should be pretty accurate with the pricing. So we're gonna have to wait and see what happens with that. So I also wanted to show you something that's funny but sad, sort of at the same time. So if I go to my screen here,
Okay.
found this on Twitter. So Trump mentioned the word deal 37 times so far. So there are 37 claims by the Washington Post's count. You can see all of the times basically they're listed here. So March, April, May, and now it's June. So I thought that was interesting to share. Now I'm not saying that this time is going to be the same, like a sort of a taco on the deal, but the probabilities are not great. So the probabilities are not great with this last sort of announcement. That's why personally I'm staying in my position. So I do have a short on GU, which I don't want to close yet. Maybe at the end of this day, just going into the weekend. But so far, I'm gonna have to stay with the thesis that this thing is not gonna get resolved. And also, what could happen, what could benefit the dollar is maybe a lot of people go into the dollar to go into SpaceX. So that could be another pathway for the funds. But what are you thinking for today? I know you have a gold long going, so
I'll kind of add something that goes against my theory, my hedge. I was re-watching the speech that he made, and I was also watching a lot of the text headlines from Financial Juice to get basically every key point that I could possibly gather. And there was a missing piece to everything that was said, and that was the uranium. So everything's good and dandy, but uranium was not mentioned, and that is essentially one of their biggest things. One of their biggest asks is their freedom to continue, doing that. So that gives me a little bit of like, but again, it's just a small hedge, and it was kind of more of a reactive trade there. And I think that the price action yesterday really showed, like, yields were down like almost 2%. I think like 2-year yield was down big. The 10-year yield as well is now like, I have this like upward move. Yeah, I have this upward trend line here. And so now you have the 10-year here right at this lower bound of this trend line. So I think that if you were to get a resolution or something kind of leaning towards that direction, even if it's another ceasefire or something, that if this one breaks, I think we can flush lower there. And so the gravity of the sensitivity kind of prompted me like, okay, if this one does come around, I do think I could benefit from having a short position of gold to the long side. I was telling the viewers here, I'm sure you heard it as well, but this doesn't change the story. So although I'm trying to catch a small pop in the metals or some softness in the dollar, I think that long term, you still have to really consider what central banks are doing across the globe, who's more aggressive in reducing rates and who's not, playing that game. Because the inflation is not just going to drop when the war stops. It takes a lot of time. It's very, very lagging. So you still have to navigate that. So that's just kind of the framework I'm operating in. And
the main thing I can go with is the price of Brent. So the price of Brent oil, which is still staying on that level of support, hasn't really dropped more than that, which to me personally is the main indicator that people are not yet convinced. If they were convinced, I think that level would break. So the level on Brent. And of course, we think that that's the main catalyst why inflation is running hot, especially in the US, let's say, because the oil prices are staying elevated. And as long as they stay elevated and the strait remains closed, officially closed, I think that the scenario is the same. So central banks hike and we get hawkishness all over the map. So buying the dollar and, of course, sort of a top in equities, I think I think that still could be the main theme, and that's how I'm positioned at the moment.
Now, I'll be kind of upfront here, Marco. One thing that is going to be tricky for myself is that yesterday was a very reactive day. You had ECB fund rates repricing, so in the UK as well. The UK's rate hike odds went from like a 40% to like a 20 or 30% ECB as well. They were pricing out those rate hikes. So it was a very reactive day in terms of odds being priced differently. One thing that's interesting to me today, which this is not the first case this has happened, but you have oil again back to the lower range, right? That $85, $86 mark as well. So I think that if you were to get a break lower, like if you were to get something like this, that is a world where I kind of hold on to that gold position and just keep trailing it as long as that's the case. But I don't think too, like I'm going to say this too, I don't think that the price of oil goes down to pre-war levels. I just don't think so. Where were we? Like back over here somewhere? Where is that? Like, okay, so the war
before the gap
in March. So $70. So I think the floor is pretty well set right here by the 200-day moving average as well. So I think 72 is the floor, but I do think that we end up still again somewhere within the 80s, just because you have that seasonality factor. You have demand in the summertime. People are traveling, like in the US, you know, people travel, they take road trips and all this good stuff, right? It's a very big thing. I don't think that, you know, oil is going to go down to 64 if the war ends. So I still think that inflation is still a problem. So yeah, that's my thoughts there. But as far as I know, so you're short pound right now. Equities, right? Let's go ahead and talk equities here, because you do have SpaceX here. I think that's the story we should probably cover if we want to prioritize. Someone was asking me here in the chat, you know, what do you think NASDAQ's doing next week? Do you think that SpaceX, Marco, has the ability to keep this thing propped up despite, let's assume that the war doesn't end, right? I feel like I'm Trump right now. I'm doing this thing right here. Let's say the war doesn't end, and you still have, you know, yields elevated, price of oil elevated, all that good stuff, right? But then you have, so those are all things that will push the NASDAQ lower. We've been seeing this in the recent price action. However, now you have SpaceX into the picture, this big conglomerate, right? What does that do to the price of NASDAQ? Do you think that's enough to kind of give it that tailwind to keep it elevated, or you think that the net result would still be NASDAQ trending lower? I'm curious your thoughts.
Well, I think in 5 days, the SpaceX could get put into the NASDAQ if there's enough volume behind it, because I know with the S&P, I think it's 90 days. But
yeah, they dropped it lower.
Yeah, with the NASDAQ, they dropped it only to 5 days. So in 5 days, it could be put into the index. Personally, I think this whole event introduces a lot of supply. And I think the initial rotation is going to be out of some tech stocks into SpaceX, which initially should push the NAS lower. But then also, I think the conditions right now are not right for the NASDAQ to appreciate in the next few coming weeks. So I would say we are more likely to go down rather than up. And that's how I'm positioned. Again, so rate hikes are coming. The Middle East conflict still not resolved. With all the rumors, yes, but the actual resolution is not here. You have a lot of retail hype around the tech stocks, which is not a good sign. If you look at the institutions, if you look at the hedge fund, you look at the COTs are getting out of the NASDAQ. If you look at the retail is piling in. And then finally, you have IPOs clustered together. You had, I think, Cerebral. Now you have SpaceX, which is sort of labeled as an AI company, but actually makes most of its money from as an internet provider. Then you're going to have OpenAI with Sam Altman. Then you're going to have Anthropic. So like 4 IPOs clustered together, a bunch of supply getting pushed onto the retail. Not a bullish sign.
Like, we're going to have, Marco, sorry to cut you off, Marco. No, we're going to have mangoes. We're going to have mangoes, man.
I don't know what mangoes are.
Let me show you. Give me a second. Why is my internet not doing it? Let me see. Let me show you mangoes.
Okay.
Damn, Instagram's not working. Let me see. Oops, I don't want to expose this. This is the A1 Trading kind
You
of
want me to share
framework.
my screen until you find it?
No, I moved it over here.
Okay, cool.
Let's see. Where is it? Oh, there it is, right here. Meat mangoes, Marco. Meat mangoes. This is the new thing. So we had Fang.
Okay.
And now we have
Okay.
mangoes. So like you just mentioned, we have Meta, Anthropic, Nvidia, Google, OpenAI, SpaceX.
Yep.
That is
Yep.
the new regime here that we're operating on. So sorry, continue your thought. This took longer than I thought to integrate this into the conversation, but go ahead.
It sounds funny because my first community that I had with my 2 trading buddies was supposed to be called like Mango something. It was supposed to have mangoes in the name, so it was always super funny to me.
There you go.
Yeah, that's super interesting. But that's my conclusion. So I think most of the catalysts are pointing bearish. And what I wanted to say, so I've been reading again the new Market Wizards book, and all of the guys in there, it's pretty fresh. Their commentary is pretty fresh, and they're all saying like, look, the current market conditions are really not so great, not so bullish for stocks compared to, let's say, 2020 and 2021, when you had sort of rate cuts, you had massive liquidity being pushed into the markets, money supply expanding, stimulus checks. That was a whole different environment. So right now, a lot of the pros, the veterans, are saying be careful, and I'm definitely trying to listen to those guys. But what do you think? What do you think about it?
About like SpaceX in particular?
No, the NASDAQ in the next 1 to 2 months, let's say.
Okay, the general NASDAQ in 1 to 2 months. Oof, I think you're gonna see a lot of noise right now, like up front.
Okay. Yep.
But 1 to 2 months from now, it really all depends, Marco. Like it really depends on and I guess the viewers are gonna hate this answer because I'm gonna say it's gonna go either way, but it really depends on kind of the landscape that we're operating in, right? Like if you have like liquidity tightening, you have a higher rate environment, it's more restrictive, inflation is a big worry for the everyday people and stuff like that. I think that the NASDAQ will probably just chop around similar to like gold, where like it really topped and then it's kind of just range bound, kind of drifting lower there. But if you get the end to the war and then you add all this like excitement to the market, right? You have mangoes coming into the picture. I think the NASDAQ has a lot of room to run it. I know a lot of people say that, there's an AI bubble and it's about to pop. But imagine if you have, the Fed intention to go ahead and lower rates, and then you have strong fundamentals underneath the US. I mean, you got growth is solid, the labor market's solid, and then the prospect of inflation cooling down. And then you have all of these shiny objects here that you're able to participate in. You got the mangoes. I think that, the bubble is probably halfway full then at that point. I think that maybe it pops way over here somewhere. I don't think that it has to pop right now per se. So I think it's really contingent on the kind of landscape that we're operating in. Is it higher rates? Is it more restrictive? Is it more like, you don't want to add too much risk because you got things going on in the Middle East and everything like that? Or if it's just a very, all that's behind us now, we can have a great summer and start investing and go crazy, right? I think it really depends on that.
Yeah, essentially it's all connected with the Middle East, right?
Because indirectly, everything is directed to that. So
yeah, I think like in the last 3-4 months, whatever you were trading could be impacted by the Middle East. Essentially, the stop loss or the take profit could be hit because of another development in the Middle East stuff.
And let's talk about the opposite end of the spectrum too, right? Where we keep saying, me personally, I'm going to admit this, I keep saying like, okay, if the Middle East ends, if the war ends, well, what if it doesn't, right? We already saw what happened on Friday, that on that NFP candle, when it basically confirmed the Fed is able to hike rates if they need to. If you see more of that, right, where the VIX spikes, yield spike, correlation goes to 1, then where's all the cash? The cash is not going to go into Anthropic. It's not going to go into SpaceX. If correlations are going to 1 and everything is selling off simultaneously, there's nowhere to go but to be in cash. And so that's another thing we have to worry about as well. Like if things escalate on that front, well, that's definitely going to hurt the NASDAQ, right? So I think you have to be aware of everything.
Absolutely. But Yeah, I would say if you do get a resolution, it's gonna be massive euphoria. I mean, just look at yesterday. So we got a massive candle. It's a really big candle, really big bullish candle, and it was just another rumor. So nothing was confirmed on Iran's side. But if Iran confirms it, then you actually get a deal. I think that could be explosive and bring another leg up. Let's say, I think George Soros said, so the best time to participate or to go long is right when the bubble starts sort of going up exponentially. But the hardest part is buying into a bubble because you know it's going to burst sooner or later. So it's contradictory, because as a trader, you know that this is not sustainable, but also the best profits are made if you can just buy at the right time and hold it through the bubble. So another leg up could absolutely print. And in that case, I would most likely go back into equities if we get another leg up. But I would say that one last leg up could be the final one. So the top is somewhere near. That's how I'm feeling the markets right now, from all of the readings that I'm doing and from the traders and the veterans. The question is, has the top been reached, or do we go up one more time? That's at least my opinion, right?
No one ever knows, and it's easier said than done. But in trading, sometimes you have to buy high and sell even higher, right?
And
and just kind of like what we've been doing with the dollar, which is just milking that cow until it no longer gives in, right? So I got stopped out yesterday, but again, if the war doesn't end, if you get nothing on Sunday, I'm going to just re-enter the dollar long and just continue that wave until it no longer gives me anything anymore, until something fundamentally changes.
And our win rate is usually, or my win rate is 45 to 50%. So I'm right less than half of the time. The key is, of course, when you lose small, but when you win big. So you don't even need to be right more than half. You just need to hold the winners through. So yeah, whatever happens, like I'm positioned currently long on the dollar. I think there's a 50-50 chance we get an actual resolution. But if that dollar does appreciate more, I'm going to make, let's say, 2 or 3%. And if it loses, I'm going to lose 1%. And that's basically trading. So finding that reward to risk with the trade and not focusing on the win rate too much.
And have a game plan too for when you are wrong. I think that's where a lot of traders also fall short, is like they have this idea, they get married to the idea, but then if it doesn't go wrong, well, what do you do after that, right? And that's when you start getting into like revenge trading or going on tilt, because you don't know, you're making bad decisions. But let's say the war does come to an end. What's the game plan after that, right? Because we're so focused on long dollar. Well, my game plan, me personally, I'm going to probably get a little bit of that gold action, right? A little bit of a pop in there, see how long that will last me. Just because I do think that, I mean, gold saw a 3% update, I think, yesterday, if I'm not mistaken. It was very reactive, or maybe I'm wrong here, but
it was a nice pop. It was a nice
4.6%, 4.6% on gold.
That's
so
nice.
It was nice, right? Very reactive. So I want to ride that if that does happen. And again, you just have a game plan for what happens after.
Yep, absolutely. So has it been market open in New York yet? I think it has, right?
It's 9:03. Very, very, very quiet open, I would say, Marco. It's they're pretty flat on the day, so nothing much going on there. But I did notice here that I did go over my segment here by 3 minutes, so 4 minutes. So I'll go ahead and let you to it, man. I'm gonna be in the background though. If anything changes or whatever, I'm definitely gonna be at the desk all day looking at what's happening in the market. So I'm here.
Sure. Thank you, Alan. And again, another great segment. So let's see what happens during the rest of the day.
Man. Enjoy your weekend. And one thing I will pivot out here before I go. This environment that we've been trading in is very, very tricky. Let me go ahead and put my screen up here. So I know we have a lot of new viewers on here, so I want to make sure I'm talking to you guys. But the market that we've been trading in has been very, very tricky. But it doesn't have to be tricky. So if you want to, start implementing technicals, of course, fundamentals and sentiments, go ahead and consider getting the copy of the Edge Finder. It's a tool that I use personally to make my trading decisions. Marco as well.
Absolutely.
It makes it so easy. It integrates everything for you, all of the relevant data points that move an asset class. It does it for you, and it gives you a read. So it takes everything into consideration, and it gives you a bullish or bearish reading. Marco, myself, and Nick as well have been participating with long dollar, right, during this whole environment. You can see here that on the top left of my screen, you can see dollar is getting a bullish reading. So the Edge Finder is telling us that we are in the right direction as of now. As things change, the Edge Finder would go ahead and flip that score and tell us something different. So for those that are curious about the tool, go ahead and consider buying it. We'll probably drop a link there in the chat so you can explore it. And we also have a free Discord and Telegram as well, where you get free value. But that's my little pitch there, Marco. I truly stand by the product. It has paid for itself many times over. So definitely consider buying it. Use code Marco or Aspire, whichever one, doesn't matter. We'll split it either way, just to help us out. But yeah, definitely add this into your trading. It's a game changer.
Absolutely.
All right, man. Take it easy. Have a good weekend.
You too. See you. Okay, so let me bring up the chart. Let me see. If we go to Hyperliquid, let's take a look. SPACEX. So no real development that I can see. No massive moves yet. So current price should be around 176. But again, as I mentioned, so with SPACEX, it's an auction. Essentially 2 to 3 hours, I think, after the market opens, you get an auction, and then during the day it opens up for the public, and you can actually find the ticker and you can actually see the price and trade it. So that's usually how it goes with IPOs. But the current expected price, 176. This is pretty accurate. So Hyperliquid was pretty successful with, I think Cerebral, so CBRS. That was an IPO that happened on the 1st of May. And the price on Hyperliquid was pretty close to when the IPO actually opened up. I think this is it, not sure. So as far as the markets go, at the moment, I have a sell on GU. I'm planning to hold it because personally, I don't believe that the deal is real. I think it's just another sort of fake tweet from Trump. I also was seeing just before I joined on Financial Juice. So I saw some stuff. So okay, you have Trump, Iran leaked terms do not match written agreement. An MOU with US is under internal review, but I saw some negative stuff. Anyway, so the claim of signing the agreement on Sunday in Geneva is pure falsehood. Farce news, cites informed source. I don't know. It's getting very complicated. Looking back at the history, looking back at the last 3 to 4 months, for me, this is all that matters. So 37 proclamations about a deal, none of them were successful. So Iran deals actually finalized, 0. So it's pure data for me. That's why I'm going to stick to the bullish dollar thesis. I'm looking at USD JPY to sell at 161 for a possible intervention. And I'm looking at the Nikkei, which is my favorite equity, if we get some sort of a bullish catalyst and if we get a bullish reading on the Edge Finder. So right now it is neutral. Let's take a look. So Nikkei. The Nikkei is neutral at the moment, but if this flips bullish, I will take a stab long on the Nikkei. I absolutely want to rely on the Edge Finder with this. I want to get a bullish print first because from my testing, from the back testing, from the live testing, the Edge Finder is just a great confluence to have, especially on equities, especially with assets that have a positive skew. Positive skew assets are indexes, so the Nikkei, S&P, NAS, gold is a positive skew asset, Bitcoin is a positive skew asset, which means they move up over time, right? So I do want to mention, if you're looking to get funded, you have the code A1 live, which gets you, not liver, but live, which gets you 35% off any DNA, or sorry, not DNA, but OLA Prime account. Okay, So Ola Prime, in my opinion, a very, very good prop firm. What I really like about them is if you look at Ola Prime Trustpilot, they have a 4.5 rating. Okay, and that's really rare. Usually with prop firms, if they can have 3.5, they're a good prop firm. I mean, they're not a good prop firm, but that's what most of them have. So a 4.5 score, I would say, is really, really good. And they don't have the consistency rule on some account types, which in my opinion is a key if you're a swing trader. So consistency rule really makes things a lot harder for traders. And Ola Prime not having the consistency rule, in my opinion, is another good part about it. So with the code A1 Live, you get a great price. You get 35% off. All of the information is in the description of the stream. So that's for the watch list. Now, looking at the NAS, actually turning bullish at the moment. I'm guessing that doesn't have much to do with SPACEX. I'm guessing that mostly has to do with the stuff I saw. So with the stuff I saw from, let's say, what is it? Financial Juice. So the terms that Iran leaked out of the fake news have nothing to do with the terms that were agreed to in writing. I don't know. So ships leaving the Hormuz Strait is totally unacceptable. They better get their act together fast. Okay. Let me check some comments. I saw some stuff. So Japan announced that they now have procured enough oil to maintain supply stockpiles to March 2028. Okay. NAS needs the pullback. SpaceX to join NAS in 15 days. Interesting. I thought it was 5 days, but it could be 15. I may be wrong. I doubt my order will ever be filled on SpaceX. How's the DNA challenge going? It's in drawdown, so I can bring it up on the next stream. I forgot for this stream, I'm sorry, but it's in a bit of a drawdown. It's not going that well. So by the way, that challenge is purely traded by ChatGPT. It's a series I'm doing for my YouTube channel. My personal trading is actually doing pretty well. So I've had some really good winners. The main one being the sell on GU, or the main recent one. So sold it, took profit on Friday, and in another position right now, decided to re-enter at a better price. Okay, didn't want to sell the lows, of course. So got a bit of a better price here. As far as events go, if we jump onto the calendar, we had the NFP, which came out strong. We had the CPI and the PPI, which came out, in my opinion, hot. I know they were near the forecast or close to the forecast, but if you jump on the Edge Finder and you go to inflation, you will see a clear uptrend. So look at this, dollar, CPI, definitely rising. The PPI rising as well. So it was 6%, now it's 6.5. I would say that is a clear uptrend. I would say that is inflation that's not under control, even though they have moved the target from 2% to 3%. We all know that they have moved it to 3%. Yes, they all say officially the inflation target is 2%, but it has been 3% or near 3% for 5 years now. So if you go back, let's say we go back 4 years, we haven't been at 2%, not even once. But okay, so the target is 3%. We are now at 4.2. That's way above target. That's a problem. And I think the Fed will need to hike if the current market conditions continue. What I'm looking at is next week, the Fed funds rate. So the statement, the press conference, the projections. The main document I'm looking at is actually the projections. So most traders will be focusing on Kevin Warsh and his speech. It doesn't matter if Kevin is hawkish or dovish. I mean, it does matter, but he's only one guy. So there's 12 committee members. They all come together. They vote. It's a democracy. What I'm looking at is the economic projections document. Now, that document, that's also called the dot plot. That document will tell you the positioning of the 12 committee members. So even though Kevin may sound dovish and he may pick the most dovish inflation print out of 50 inflation prints, the market may react in a dovish manner initially, but it's all about what the 12 committee members think, because those guys come together and they vote. About the dot plot, will it go up? So will it be revised to the upside for a potential hike in 2026, or will it stay dovish or stay neutral? That's going to determine of my positioning. So if it goes up, if the dot plot comes out hawkish, if this document comes out hawkish, I think I'll add on more size to buy the dollar. Maybe getting on some sell setups on stocks. Maybe thinking about it, especially if the edge finder flips. If the edge finder flips bearish, that could be an interesting scenario. So that's about it. We have the next guest coming in, which is going to be James. I wish you good luck in the markets. Have a great weekend, and you can catch me next week on Monday. I will be streaming pretty much every day of the week. So yeah, good luck. Let's see the SPACEX IPO, and I wish you all the best. See you.
What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Probably unmute myself. That would be a good idea. How's everyone doing? Happy Friday, ladies and gentlemen. Let me sort my camera out here. There we go. How's everyone doing? So what's going on with me? Not too much, actually. I'm in Aussie, New Zealand. I was in long on an HK50, which is Hong Kong index. Closed out on a break even yesterday, just because there's too much indecisiveness. I don't really have much of a bias on the indices side of the market, so I just decided to close it flat. And yeah, currently sat in euro-dollar shorts as well. But that's about it. Yeah, completely chilling. Euro-dollar is a little bit frustrating because, we had a really nice entry over here. Then it came into a pretty decent profit, around 1% or just above 1%. Then we've had another move to the upside. So now I'm hanging around break even. So fun stuff. Very fun environment for us to deal with at the minute. But yeah, that's that. But yeah, that's pretty much it. Let me just take a quick look at the watch list for today. Let's take a look at the Edge Finder and see what we've got going on. Let me get rid of that and hide neutral. So US dollar is still getting a bullish reading, which is great. Oh, dollar yen. I forgot to tell you on that one. I decided to just take a very small loss. I had quite a nice move to the downside overnight, so I closed it. I think it was like negative 0.05 or something. It was, yeah, really minor, but I just wanted to get out of that one. I wasn't overly happy with it. So yeah, dollar still getting a bullish reading. Obviously, I'm expressing that with a euro-dollar short. Dollar yen is bullish. Aussie Swiss, gold, CAD Swiss, Aussie US dollar, US 10-year, euro dollar, New Zealand US dollar, and pound dollar all getting bearish reading. So I think the theme is still very, very clear. It's just a case of buying the US dollar. So we did have contraction within the UK, which was good to see. I mean, it's not really good to see because I live here, but still good to see for my thesis. I thought the IPO was coming out today, the SPACEX one. Yes, I've got no idea about that one, to be honest with you. Not a Scooby-Doo, so I couldn't tell you anything. But yeah, pound dollar's looking pretty good. So I wouldn't mind maintaining a short bias here. I'm just thinking, how could we potentially get into this one? So I think it would be very simple, actually. Fit from the previous high to the low. We haven't really, well, we haven't at all closed above the 61.8 retracement level. We've still maintaining prices just below our 200 moving average as well, which is pretty good. So I think overall, this type of trade idea is very valid. The problem is I'm already in a euro dollar short. I don't want to double up the dollar long exposure with going short pound dollar as well. But I actually do like pound dollar slightly more than euro dollar. And I think the Edge Finder is also suggesting that as well. Only slightly. So pound dollar is -9, euro dollar is -8. So there is that, slight relative strength with pound dollar, or more relative strength, I should say, with pound dollar than euro dollar. But yeah, so Australian dollar, US dollar also is very, very good. I really like that idea. Not necessarily just from a fundamental view, but also from, I keep saying this, but more from an unwinding side of the Australian dollar as well. Just basically when I say the unwinding, I mean, obviously we had Australian dollar dominance earlier this year, and now that's not really the case. So I think there is some long positions that do still need to be unwound over the course of some time. What's going on SpaceX IPO? Yeah, I've got no idea. I think if you get the stock box, you will be able to see what's going on with the SpaceX IPO on there. I'm fairly sure they've got all the times and things. I'm not really sure, but yeah, I would suggest stock box if you're a stock trader, but I'm not. I'm a degenerate FX trader, so yeah, I can't help you, unfortunately. I think Google is also free. But yeah, Aussie US dollar, I think technically speaking, look for a 60, or I'm looking for a 61.8% retracement, so slightly higher price, meet the 200 moving average, and then reject this level, also retesting these previous lows that provide the break, retest, and continuation type of pattern. So I think overall it's a very simple but pretty sexy idea, to be honest with you. Okay, so what else do we have? I don't think we've got COT data yet. Let me just see when the latest one is. I'm not sure we will have got the new one. No, we don't. So the next one, I think this means 5 hours, so about 6 hours until we get the newest release, which is completely fine. So we'll skip over that until next week. Just thinking, so gold's getting a bearish reading, which is quite nice. So we've been talking about the metals a lot over the past couple of weeks. I haven't really seen much that would make me want to get in. And that's more from a technical side, not necessarily from a fundamental side. I think gold, has been in quite a significant bearish environment. It'll come out later for the public. Big boys are trading right now. Well, I've got a friend that's been in since $27. Big boys have been buying in for a long time. I think he got in a couple of years ago, actually, like 1, 2, 3 years ago. So I don't think it's a big boys thing at the moment. I think they've already got their positions in. It's more just waiting now. But gold. So actually in a very nice technical level here. So obviously we draw the fib from the high to the low, pulled back into the fib zone here, seeing a really nice rejection of this 50% retracement. And it could be now a case of just further downside on gold, which I do really think is probably the base case at the moment. The title of the video is SpaceX. You should have some knowledge on it. Where's Nick? Tired of his brokers promote the Edge Finder with their trade ideas. Okay, Nicholas, no problem. The back button or the close button, YouTube button to go back to your homepage is free. You don't have to stay here. Why are you in the chat asking me about SpaceX IPO and then calling me a brokey? That makes no sense. But anyway. It's Friday. I have no time for your shenanigans, my friend. And to be honest, the fact you're sat here on Friday trying to get hate on me, so it says more about you than me. So anyway, moving on. US 500. Clean cut, James. Thank you very much, Josh. Appreciate it. It's a little bit shorter than I would like, but hey ho. It's the joy of going to Turkish barbers. If anyone's in the UK, you'll know the struggle of dealing with the Turkish barbers. They always cut it too short. Anyway, what are we talking about? The US 500. We'll take a quick look at the indices markets. There isn't much I'm really looking at here because we're not seeing much go on. So we've seen multiple times buyers try to reclaim after we saw the Friday sell-off last week. However, multiple failures, 1, 2, and we're currently on the third day, actually, of buyers attempting to step in and push this market higher. Continuous failures, as I said. Now, the downside is, you've got two aspects. You could either take the, I I mean, you could say this about any market. I'm not going to sound super intelligent when I say this at all, but you've obviously got a bullish idea and a bearish idea. I think the bullish idea would be obviously like the SMH, semiconductors. You more play on the tech side of things, AI, data centers, so on and so on. I think that's also completely valid. But then you've also got the other aspect where we're seeing dollar strength starting to come back into the market. Let me open my what do you call it thing, my lines and charts here. So we are seeing the US dollar starting to outperform other G10 and G7 currencies. So there is that side. And again, that's driven by the Fed taking a more hawkish pivot, which is obviously negative for these markets like the indices, S&P, NASDAQ, so on. So, it's really, what do you want to bank on? Do you want to bank on the Fed hiking rates, dollar strength, and then US 500 down and NASDAQ down? Or are you playing the side of AI and optimism and all that type of thing and going long on these markets? Again, that's completely your decision. I think it's a little bit difficult, really, to find a solid idea. And that's just my opinion. That's why I'm not involved in this market right now. So if you are taking the bearish case, let me change this. Hold on. Oops, that actually needs to be support. There we go. So if you're taking a bearish idea, I think the first real target will be 7,000. I think that's kind of the base case. It's the previous all-time highs. It's the most significant level of structure we've got. There's not really anything in this left side. And then beyond there, if you are, again, pretty bullish on the US dollar and optimistic the Fed's going to hike rates, and if you put a cherry on the cake and you look at the SpaceX whole situation from a holistic view, and by the way, again, as I said, I'm not a stocks guy, so please don't take this too literally. But from everything I've seen, it's not looking too great. It's looking like it might be a bit of a disaster. Not necessarily long term. I'm not saying we're going to have a massive crash, but I don't think it's going to be, a case of SpaceX IPOs and we're going to have a rocket. I actually think it might be a bit of a reverse situation. So if we do see all of these catalysts lining up, I actually think slightly lower prices would make sense. We do have a lot of left side here that could do with a correction, in my opinion. So yeah, that's kind of where I'm standing at the moment. Ignore the, I don't think I can say bad words on this stream, so I'll keep it PG. Happy Friday. Happy Friday to you too, KDX7234. I like your positive vibes. Yeah, like people that work for SpaceX or initial investors, I think big players still get first buys. Well, the thing is, I've been invited probably 7 or 8 times to get in on the SpaceX IPO. And that's not a special thing, by the way. I got it through my bank. I got it through, I think, Pepperstone. It is very publicly available to get in before the IPO. So I think that's also kind of what's going on. But then it's like, from what I've heard again, it's 4 times oversubscribed, and they're only giving away 5% of the shares. So, I just don't think this is a brilliant situation. So it might be more of an idea to go short on these markets. Again, not financial advice. James, where do you think? Oh, wait, hold on. James, do you think we're back to trading fundamentals? I haven't had time to take a swing. Yes, I do. So I think the Iran situation is overshadowed now by the Fed. Now, that doesn't mean headlines have no effect. Of course they do. I think we saw that, was it yesterday evening? So if we actually go to the 5-minute here, you can see that yesterday when we got a headline in. I think Trump said something, no, there was some news about some sort of ceasefire or peace deal. And then it came out again today that actually that's not the case. So intraday sort of headlines obviously still have an impact, but I think overall direction is mainly at the moment driven by, the fundamentals and things like that, like inflation and growth and Fed, or central banks, I should say. Found my edge. Thanks, Matthew. I should hope so. What do you think about EU fundamentals? Bearish, my boy. So if we have a look at, what should we look at first? I suppose we could look at the heat maps first. Just bear with me for 1 second. I'm just keeping an eye on the futures markets for maybe a position, but I'm not seeing anything at the moment, so I just need to keep an eye on that. So, US economic heat map. Still reading very bullish. So we've got 75% score, obviously, again, in bullish territory. Growth isn't looking fantastic. So GDP came down to 1.6, which is obviously an undershoot from forecast, which is a bearish catalyst. Then we've got US initial jobless claims, which was also bearish, but that's it. That's the only bearish catalyst we've got. But yeah, overall, the US is looking good. And again, we are in for those Fed rate hikes. It seems like we're priced in basically by the end of the year for at least one hike by the Fed. Then we look at the euro. Fundamentally speaking, it's not terrible. But again, when we're looking at FX markets, obviously euro against the dollar, we need to look for relative strength. It's not a case of, one's okay and the other one's okay, so we can't do anything. It's, which one is stronger? Obviously, simplifying that massively, but you get the idea. The ECB did hike rates, but it wasn't I don't think it's really a hiking cycle. I think it was more just a case of it was a hike, one and done, and move on. I don't think it was a case of, we need to buy the euro because the ECB is in a hiking cycle now. Then we also look at the heat map here. So growth is bearish. We've got retail sales bearish and unemployment rate bearish. So when we take all of these things into account, except actually the central banks, because I don't think the edge finder works on central banks, but we go to Forex scorecard, and we look at euro dollar, we can see when we aggregate both of the economics together, the resulting factor is -8 for euro dollar. So technicals are bearish, COT is neutral, sentiment is neutral within retail. However, this is what I like to see, which is when all of the fundamental categories are in line. So excuse me. Speaking too fast. So growth bearish, jobs market bearish, inflation bearish. So as long as these three are all good to go, I don't really care about the top three because these are not really market drivers. You could say institutional activity is COT drive markets, which is a fair statement, but it is a week behind and it doesn't really matter too much. Sentiment bias, I also don't really care what retail's are doing because, it doesn't tell me that much. They lose obviously the majority of the time, but that's not really enough. It's good for the overall direction, but it doesn't matter too much for me. And then technicals, obviously I have moving averages. I find my own trend, but yeah, fundamentals there, so that's all good. So when we look at euro dollar, which I'm actually already in a short position for, by the way, that was my own personal framework, if you will. They do matter, but again, you need to figure out for your strategy how they fit in. So euro dollar, I think, is still a very valid trade. The H4 is not looking great, but if we use the daily, which is also a very sensible idea, we take the fib from the high to the low. We're currently within this fib zone, which also lines up with previous structure on the left. So we've got the break, we've got the retest. Now we're just waiting for this continuation to the downside. We've got really nice potential targets on the daily as well, or in general. So when we look, or when we zoom out, there's so much going on. So we've got a lot of support here on the left, which would obviously be sort of TP1, if that's the way you trade, which would be, for me in this trade, would be about 2% profit. We could look down here, which sort of extends to this level here, which would be about 4%. Again, this is obviously if you took the same stop loss, the same entry. And then if you got, an absolute collapse of this market down towards parity, then you've got a really nice take profit level at, what level is that? It'd be 1.05. So yeah, euro dollar, I think it unequivocally bearish. Then we've also got some pretty nice, hold on, let me just take a quick look. So Danske Bank has a target at 1.12. ING has a target at 1.13. Credit Agricole 1.14. ING 1.15. SEB or SEB is at 1.15 as well. JP Morgan's also 1.15. And then Naxis, however you say that, is at 1.2. There's only one institution that's bullish on euro dollar at the moment, at least from what I see. SpaceX is the biggest talk ever in history. Yeah, I would agree. I think it's not just big because of the speculation and sort of the doomer talk around it, like I've been saying. I think it's also big because it's the biggest IPO in history, valuation wise. So, I saw a thing this morning. Nvidia is worth more than the entire pharmaceuticals market. And again, I'm saying I saw this. I don't know for a fact. I could be wrong. Maybe my source is bad. So if you do use this information, make sure you double check it. But yeah, I think the stock market, generally speaking, especially within the tech sector, I would say is extremely overvalued. I'm not really sure anyone would disagree. Maybe they would, but again, I'm taking this from more of a FX trader's point of view rather than a stock expert. Bearish, okay. Why euro pound kind of stuck there? Could you please look at that? Yeah, so euro pound is kind of stuck because there's not much going on. So let's take the daily. Let's get rid of all this. Actually, hold on. I think I've already got my analysis drawn up on this chart. There we go. So euro pound is kind of stagnant because we've got, on a technical side, we've got a really nice level of support through here, but we are creating these lower highs. So from sort of a momentum view, there isn't really anything going on. You know, we're technically downtrending, but we are also holding a major level here. So there is that idea that there really isn't much to do on a technical side. But then if we look at the fundamentals for euro pound, again, I don't think there's really anything going on here. So he's -4, which is actually interesting. I would have expected it to be positive, to be fair. However, again, the fundamentals just aren't really there. So we don't really have fundamentals. There's not really much going on the technical side. On a central bank aspect, what do we have here? So yeah, the ECB is on hold, and the Bank of England is currently holding restrictive. But yeah, I mean, I don't really think the Bank of England has much room to hike, to be honest. I think growth is a bit of a problem, or at least will be coming a pretty serious problem eventually. So yeah, I think from a central bank side as well, there's just not really enough to warrant a position. Am I still considering Euro Aussie? Yes, I am still considering Euro Aussie. I've not actually looked at that one in a while. Well, I say a while, since yesterday. However, we are starting to see what I want to see. So if you've been paying attention to what I've been talking about in this market, when we were sort of down here, we were looking at the weekly support level. Since then, the next idea was we needed to see these highs break, and we need to see a higher high get printed, which has happened. We now need to see, I now need to see a pullback into this level, retest the previous high, this break, retest into the 50% retracement. We've already got the bullish trend that's established now, and then that would provide the technical setup for me to get along. On a fundamental side, it's not super clean. So as you said, it's not on the edge. I think as you said, it's not on the edge finder as a bullish reading. I don't think, actually. Let me just double check before I say that with certainty. Yeah, no, it's not. It's got a score of 2, which again isn't enough to warrant a trade by itself. However, when we take into account the idea of the Aussie dollar unwind that I've been talking about, the fact this market's had a really aggressive move to the downside, and I just really think this market needs to have a bit of a correction back to the upside. So if we look at the monthly time frame, we came down to the monthly 200 moving average, the RSI. Not anymore, but was a little bit oversold here. Same thing on the weekly as well, became quite oversold. So I think all the technical signs really are there that we do have a little bit of room to head higher. Maybe not all the way back up to the highs up here, but yeah, I would say there is definitely upside potential. Eurodollar is a beautiful chart. It is. I like Eurodollar. It's one of the markets, if I can get, or if I can justify a short position, 9 times out of 10, I will take it, because I really like just sitting in shorts, because you get paid swaps. It's pretty chill market, generally speaking. Technicals normally are pretty simple. Swaps are nice. So yeah, it's a good market to be in. It could happen through ABC correction. I have no idea how you even begin to draw that. So let me have a quick look. What is an ABC correction? So I guess Elliott wave correction, ABC. So you got A, B, C. No, that can't be right, because maybe C will be there. So you go maybe something like this. Is this how you draw it? So you got an A, B, and then C would be like this. Look at that. I'm an Elliott wave expert, and I've only just drawn it. Check H1 on Euro Aussie. Okay, let's have a look at the H1. So, okay, I think, yeah, I mean, would you just use it to measure a trend, something like this? I assume maybe something like this. XABCD? Oh, yeah, too many letters. Too many letters for me. That's why I like trading, because it's mainly numbers, not letters. Okay, right, let's have a move on. Let me just double check my time here. So 39:45. Okay, I've got 6 minutes until Tiger comes to take over. So if there's any chart requests, let me know. If not, I can keep rambling for a little bit, and we can take a look at what's going on. Again, let me just take a quick look at something on here. Frustrating. I've been stopped at break even on my, I was long on the Dow, got stopped at break even, and now it's rallying. Unfortunate. Anyway, silver, I would still really like to be in silver. However, I think actually at this time I would disregard silver and focus mainly on gold. I think, and that's mainly for the technical side, because I think the technicals are just a little bit cleaner here. So if we look, fib from the high to the low, it doesn't really line up too much. But then we look at the gold, it just looks a little bit better here. Really nice fib level. Excuse me. And we've got gold reading bearish on the edge finder. So I would prioritize gold at the moment over silver. Kindly check CAD Swiss. What's going on with CAD Swiss? I don't think really I've got too much here. Let me just zoom out. So weekly support here, monthly support here. We've also got a low down there. So I suppose you could take two. Well, actually, I suppose the only approach I would take here is trend following. So I would look for shorts because we've got bearish trend on the monthly, bearish trend on the weekly, and the daily is also bearish. And we just had a rejection, or almost a rejection, of our 200 daily moving average here. So you could maybe look for short into the previous low, or if you're a little bit more conservative, you might want to wait for these lows to break, because we're actually kind of just stuck in a sideways range here. So although we are trending to the downside overall, obviously that's a monthly and a weekly time frame. Sort of daily, there's nothing going on here. You could have actually shorted this market in, let's say October last year, and you'd be lucky if you were in profit. So it's just not doing anything. It's not really worth paying attention to in my view. I'm the creator of cryptocurrency. I know you appreciate me. Soon I will secretly send you. Okay, Satoshi Nakamoto. Fine, send me some Bitcoin. I greatly appreciate that. Okay, so Bitcoin, it's tricky at the moment because I think there are, and again, I'm going to sound very flimsy when I don't like, normally when I give you analysis, I'll try my best to give you a clear bias, or at least my bias of bullish or bearish. Sometimes I can't do that. Like I did earlier with the S&P, you could make an argument for both sides. I do lean slightly more bearish, but I think there are definitely those arguments. I think it's kind of the same with Bitcoin. Again, as I said, I'm not, I'm really just an FX trader, not Bitcoin, not crypto, not stocks. However, if you are bullish on Bitcoin, I think it would be very sensible to look for buying opportunities on the dip. I think this is, a very obvious buying level, not financial advice, of course. However, if we look on the daily, it's very concerning to me because we are continuing this really nice, very smooth, this is textbook downtrend, almost a rejection of our 200. It's a lower high. Again, rejection of 200, lower high. It's very basic. So I think the argument really would be, are we going to get another lower high printed and then we're going to head towards 50, 45, 40K? Maybe. I think based on just technicals, that might be the best way to go, or the base case, maybe. But yeah, I'm struggling really to find a buying idea other than the fact of this weekly support here. So I will leave that one there again, because I don't want to speak too much on something I'm not fully educated on, because then I don't want you guys doing anything stupid on the back of that. Okay. Euro New Zealand. I don't know about this one, to be honest. I don't think there's anything. So I'm pretty flat here. So weekly's bullish, daily is flat, H4 is flat. Yeah, so if we look at the daily and the H4, which is kind of what we pay attention to as sort of, retail swing, we're kind of, that's a horrible line. We're kind of just stuck sideways at the moment. There's not really an established trend. The moving averages are just side by side. We're creating these lower highs, but nothing going on the daily. H4, again, kind of nothing going on, stuck sideways. We kind of, sweep the lows, if you will, if you're an ICT person or whatever, fake out, whatever you want to call it. But overall, there really isn't a direction here to trade from. And then, as always, where's my edge finder gone? It's hiding. here. If we look at Euro New Zealand, I know I'm actually slightly over time, Tiger. I apologize. I know you probably sat there waiting for me. If we check Euro New Zealand, we've got a score of 0. So there you go. No fundamentals, no technicals, completely flat. Guys, I'm going to head off now. Thank you very much for joining. Stay safe. Enjoy your weekends and the rest of your Fridays. Don't get margin called and don't go anywhere. We've got Tiger coming to take over the show.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's up, everybody? Happy Friday. We've made it through the end to the end of another week. It's a great day by default, as always, every single Friday. Hope you're doing well. Let me know in the chat what tickers that you guys may be looking at. Definitely keep in mind Nick's code, the 35% off A1 Live, if you manually type it in at olaprime.com. Otherwise, you got the QR code there on the screen for the account of your choice. All right, ladies and gents, really just had a couple of things written down here. Obviously, we got SPACEX going live today. I still haven't seen any price data show up, so I don't know when that'll appear. But I got one message to Elon, and that's, brother, can you spare a dime? Because he's making a lot of money today. Actually, yesterday already, $75 billion for that IPO, plus whatever the crowd does today. So it's going to be interesting to see if it flies up or if it plummets. Just for kicks, just to be cheeky, I put a $50 limit order in on my Robinhood account if it drops that far. But anyway, that's just more of a joke than anything. Possible peace deal this weekend. Is that actually going to come? Guys, as always, we've had a lot of good news come out of late over the potential peace deal, the memorandum of understanding. So only for stuff to get debunked. It's the same message every day. This is the strongest one yet for President Trump about possibly signing a deal. Sending Steve Witkoff, Vice President J.D. Vance over to possibly sign it. But until that ink is dry, I remain skeptical, guys, especially as a content creator. Early on with some other projects I was doing, I was starting to write content every time we would hear these positive dealings come out, only for them to get shut down. So I just quit that because you can't always trust the sources that we think we can trust. So you got to get that confirmation. So far, we haven't gotten it yet. Even with this possible deal, there's some grumblings from the Iranian side. So, hey, until that ink is dry, I remain skeptical. Gold, XAU, 1979 AIB. Yeah, we take a look at gold. I'm interested in gold after we get the COT report come in today after the bell, because that if you guys remember, I might have mentioned this earlier in the week, but they did increase their net long percentage by 6%, the most previous data we have. Now, this data at this point is 10 days old, okay, the data that we see here, but the gold was increased by 6% from the big banks, institutions. Silver was down here at 1.5% as well. Taking a look at the Edge Finder, I'm just going to put on just my neutral items for a second over here, and you'll see gold down here at about minus, what was that? Minus something. Minus, where'd you go, gold? Did gold pop back onto our list? Oh, that's right. It popped on today, guys. I totally forgot. Yeah, it popped onto the list. Sorry about that. I totally forgot it. Well, because gold and silver, they've been popping on and off lately, and sometimes it's hard to keep it all straight. So that's why we have the Edge Finder. Okay, it sifts and sorts through all the data and shows us what is giving us those bullish bearish vibes. Gold is a -5 as we speak. So on the technical side of this gold, let's go have a look real quick. Downtrend is looking great. We broke this structural point. Talking about this wick. This is the daily on the right, guys. Daily on the right. So we did finally break this March 23rd low point, and we got to close. That's the important thing here. We got to close. We got a break and a close. But then what happened yesterday? President Trump opens his mouth, flaps his lips, says, hey, we got a deal on the way. Again, it's not a deal yet. It's not a deal till that ink dries. We got that candle pushed up. Gold traders liked it. And now over here on the left side where I actually can execute a trade, having a look at the 4-hour time frame, I've got a few different things drawn up here. The closest zone I have drawn up is here, but there was no volume. So that doesn't look like a very strong institutional type move to me. So while I drew it up, that's definitely not one I would be trading from personally, just because of that lack of excitement. The one up top is probably the strongest because the leg out candle gave us a nice yellow expanded range candle on the volume spread analysis indicator. Okay, so that is going to be the one I'm personally keeping my eyes on. As always, guys, not financial advice. Just like Nick says, just showing you what I'm interested in. Do your own due diligence on this stuff. 43.24 is definitely an area of interest for me personally. You can see I did also draw up a daily supply kind of in here. Now, I kind of had to get a little creative with this thing because normally I'll just use the daily candle. Well, if I use just the daily candle like that, let me get rid of this now that I know I'm not going to trade it. The gap, how else do I put this? It sucks. There's not much of a gap here. Okay. If I take my gap to, or my box, I go to the distal line of the, or I should say the proximal line rather, of the supply zone, which is the bottom of that daily candle. And I skip this, what is by definition the leg out candle, although it's not very exciting. And then we go to the top of the next candle. That gives us a very, very ugly, very skinny, very yucky gap. This isn't that much of a gap to me. It is a gap by definition, but it's just not very strong. That's not showing me where supply heavily exceeded demand. Okay. But it is a gap nevertheless by definition. It's just not a strong one. What if we combine this daily candle with this daily candle for the supply zone? Okay. What if we do that? So let me grab that and steal it, take it over here. Now we turn it into a 2-day supply zone. That's not something you hear about all the time, is it? What does our gap look like here? A little better, but still not that strong. Okay. It's a little wider of a gap. But hey, at the end of the day, it's not a surprise because, again, gold liked that rumor. I'll still call it a rumor at this point. It liked the rumor of a good deal or of a deal getting taken care of. And then it did stop and it did leave us this bit of a gap. So the gap is a tiny bit better. I guess what I'm saying is if we want to utilize that as a daily, I better have something strong on a 4-hour time frame, 4-hour, 2-hour, 1 hour. And I think it looks pretty strong on a 4-hour. So that's why I'm considering this area, this 43.24 area, looking at this 4-hour supply zone inside of the daily, whether we use the 1-day candle or the 2-day candle, because this gap looks a lot better. We got the proximal line of the 4-hour supply. You skip the leg out candle, you go to the top of the second candle. This gap looks a little better. This gap is just a little bigger than the zone itself. So the 4-hour picture to me looks a lot prettier than the daily. Daily looks kind of hideous. It looks kind of ugly. In fact, if we look at the daily, did the daily even go 3 units, the range? Well, this would be the bottom of the daily. This would be the top. So that's 117 points, 117 pips, however you want to look at that. What's 117 times 3? Well, I can tell you it's going to be way bigger than this, 211. That's basically almost a 2-to-1 reward. Forget the risk for a second. That's about a 2 unit reward. That's not very sexy, guys. I need this thing to go further down and give me at least a 3. So that's why I'm not really excited about the daily. The 4 hour definitely gives me the picture I want, though. Bottom of the daily, top of the daily, that, or I should say 4 hour. That's 20 points. What's 20 times 3? That's 60. Okay. Right here is 60, somewhere in here. There's 60. And then we go all the way down to here. So that's 300. So that is a much better reward picture on the 4 hour time frame. Okay. Remember, just because even if it's a good looking zone, it doesn't mean I want to take it. If it's not going to pay me, if it's not going to give me at least a 3 unit reward, I don't want any part of it. I'll settle for a 2 to 1, but I don't like it. Okay. It's got to pay me. Be selfish, be stingy. Make sure these areas are going to pay you before you enter. Because as sexy of a zone that might look, if it didn't go that far, it wasn't really that explosive. The momentum wasn't the greatest. I want momentum. So the daily didn't give me momentum, but the 4 hour did. Now, what's 4 divided by 4? The rule of 4, that's 1 hour. What about the 1 hour picture? Trying to get my 2 sets of eyeballs like I tell you guys about all the time. I've got the 4 hour time frame eyeballs. What about the day? What about the 1 hour? Does a 1 hour give me a decent picture? Okay. This looks to me like that would be the gap if we're looking at this red candle here. So the red candle is basically the same size or same range, if you will, of the 4 hour. And here's my gap. So the gap looks okay. It's not great, but it's okay. So this basically barely makes the cut for me as a short opportunity. And when I say barely, that means I'm not risking a normal risk. Probably going to cut it in half. Okay. Probably going to cut it in half. But, or you can even look at this as a DCA, a dollar cost average. Perhaps you put in a partial order here, stop loss higher up. Look at this as a little more longer term move. And then if price goes through this zone and it attacks this zone I think looks a little better structurally. So then you put your second part of your order up here. Again, you've got your stop loss here, and then you can see if you can write it down. That'll cut your risk. That'll average your price a little higher, and you're still utilizing the full range of a stop loss. So it's a little more advanced stuff, guys. If that's overwhelming or over your head, I would just ignore it. But that's just the way I'm playing it. If I get in a short here, probably not going to put my stop loss just ahead of it. Probably going to put it up here. Okay. See if the combination of these two zones might give me a push to the downside. The gap mitigated doesn't matter to me, Goom. What matters to me was the zone mitigated, the supply or demand zone. Because the gap itself doesn't have orders. The reason it's a gap for a reason. This is what I can't understand with gap traders, guys. You see them littered all over YouTube. In fact, when you watch the big loss videos on YouTube, like I've kind of mapped it out. 9 out of 10 of them are because they're trading gaps, the fair value gap trades. Okay, the fair value gaps because there's no liquidity there. We have to find liquidity. Where's liquidity? It's in the zones. It's in the supply and demand zones itself. Okay, the zone is what created the gap. And this might be a hot take for some. I don't know, but there's no liquidity there. That's why it passes through and rebases and maps itself out, further up or further down if it's a supply. But the zone itself is where that liquidity is at, where those unfilled orders are. That's where potentially banks and institutions started accumulating or distributing an order, depending on if it's demand or supply. And they obviously trade much larger accounts than us. So price moved away or gapped away too fast for them to fill their order. That's why when price comes back, that's why they start manipulating it. Price comes back. Their goal is to push price back down to where they started their order. And then they can fulfill the rest of their order and just let it blow up from there. Okay. So again, I know that's probably a hot take for some of you out there, but go look at all the videos on YouTube where they've lost big. And there's a lot of James actually, go check out James' account. James that just finished the stream a minute ago. He actually did some reactions to some on his YouTube account. But yeah, you just go look. Almost all of them are, I traded the gaps. Okay. There's nothing there. Highly subjective. Yeah. Alan, absolutely. And that's why we kind of have the running joke on the show here about gaps and fair value gap strategies. But it would, it's not to put anybody down. It's just you got to call it out because there's no volume there. Okay, that's the pass through. So anyway, I'll get off that topic. I don't want to make any enemies today. World Cup 2026. Yeah, I watched the whole Mexico match yesterday. Guys, you probably don't know, but I lived in Mexico City for about 6 months. I used to visit Mexico all the time. Puebla, just 2 hours south of there. There's actually a volcano that splits the two cities. Puebla itself is 3 million. It's, again, 2 hours south. You have to go there by autobus, and you have to go through the valley of El Popocatépetl. That's the name of the volcano. It's kind of hard to say, so people just call it Popo for short. But you have to go really, really, really high up in the autobus just to get to the valley of the volcanoes. So, but yeah, I used to spend a lot of time there. So I had my Mexico shorts on and my white legs, and I was hiding under my desk the whole time. It was great. So they won 2-0. And then U.S. plays tonight, I think. I think they play tonight. They play Paraguay. So I'll pull out, I'll put my Mexico shorts up, and I'll pull out my U.S. shirt tonight. Wear that. But anyway, World Cup's always a fun time. Guys, let me know what tickers you're after. We'll take a look at a few of these. I know that pound dollar. Yeah, see, I'm keeping an eye on some 2-hour supply zones still on pound dollar, Kiwi dollar. So let's go take a look at these. Pound dollar, pound dollar, pound dollar. There you go. Yeah, still keeping an eye on this, guys. We're kind of slowly inching our way back up to this 2-hour supply area. And again, what makes this supply zone strong is the gap out. Okay, going back to the gaps. It's showing us the pass through. It's showing us where there was no buy orders there, guys. Very little buy orders. Whatever was there got sucked up quickly because supply heavily exceeded demand. So if a gap gets mitigated, like you asked earlier, like it did right here, that doesn't matter to me. Okay? Because that's not the orders. There's no orders in there. Now, of course, people will add orders after this price happens, but I care about where it came from. I care about the origin of that movement. The origin was right here. If I'm an institution and I'm trying to distribute an order and I see that price gapped down, do I want to chase price? Do you think a bank, as smart as they are, a hedge fund, do you think they want to chase this? Absolutely not. They want to let gravity do its work because at some point, what's going to happen? It's going to bounce into another zone of demand underneath. And that's what it did. This is where I took my profits on my trade on Sunday. There's unfilled orders over here. Okay. What happened? Price bounced in, collects those unfilled orders, pushes up. This is the bank's way of saying, okay, I'll just let the retail crowd do their thing because I know there's going to be orders down here. I know this is going to push price up. And then when retail traders start seeing price move up, what are they going to do? They're going to buy breakout trades. They're going to join the trend. They're going to FOMO. Okay? They're going to FOMO. The banks are going to let the retail crowd bring price to them. And if they have to step in and manipulate it a little bit, they will. Okay? They don't always do, but sometimes they do. And then they just wait. They're like a sniper on a building. Okay. Just wait. And then when price enters the area where they started their order to begin with, that's where they can lay it on. That's where they can fulfill the last bit or continue adding to. And then maybe it'll leave. Maybe, they'll either get the rest of their order in or they'll get a bigger portion in. That's what I'm waiting for. It's the unfilled order potential. So that's why this red forecast that I drew over here, this is my idea. 2 hour, and then you go to I think it was a 1 hour or a 30-minute, one of the two, but that's where I saw my second set of eyeballs. Confirmation. So anyway, that's the look on pound dollar. Not really interested in it today. It's Friday. I prefer to wait. I prefer for that price to get pierced on Sunday open, Sunday here in the States, or early Monday morning before taking another short opportunity. So that's kind of my look on pound dollar. And a lot of these pairs where dollar is the quote currency are going to be kind of a similar picture. So yeah, I'm moving over here to Aussie dollar. Okay, this is a weak zone here. I've got no interest in it. Same thing. I just need a retracement. Remember that NFP report on Friday just totally pushed price a mile away from any of the zones I'm interested in. That's why I haven't gotten into a trade this week, and I'm fine with it. Aussie dollar zone clear up here at the top. Euro dollar, this is the one that I feel like is just a little too compressed for my taste, because you do have a daily demand here. You have a daily supply here. And is that giving us a reward at all? Can I take the range of either one of these and multiply it by 3? No, because the zones are just bouncing into each other. It's too close. So I've got no interest in it. Euro dollar for me would be higher up. Either return to the origin for possible shorts, or let's break some of this nonsense down here and continue. That's why I drew this little line up here the other day. Okay. Break these structures, and then we can maybe look for a retrace to a newly created supply zone at that point. So Euro dollar is probably the furthest from my interest list right now. And then Kiwi dollar, it's all kinds of congested as well. Let's go down to a 4-hour. Yeah, nothing's changed on this. This zone up here is ultimately the one that I'm the most interested in, because it's at an extreme area relative to these old fair market value areas, these equilibriums. Again, they look more distinguished on the daily chart here. You get these basing candles here. You get these basing candles here. The reason I like that supply zone, the reason I'm giving it the time of the day is partially, well, number one, it's got a strong gap out, showing where supply heavily exceeded demand. But number two, there's also a former support resistance line going through it. Okay. Over here, you had all these wicks. You got out of the equilibrium long enough to kind of form an overhead resistance here. And for a couple days, it became support right here. So the question is it going to, if we pull it forward, is that going to also add to the supply, the unfilled orders for potential short? Okay, so that's what I'm keeping an eye on for Kiwi dollar. Yes, I have an alert drawn up here, but I'm just curious. I just want to see what happens, because it's the same 2-hour supply that we saw on the pound dollar. It's the same area. So I do want to see what happens there, but the reality is this: even if it hits that 2-hour, I'm going to stick with the pound dollar. Number one, because it's the most bearish asset. Going back to the edge finder, okay, -9. Actually, Kiwi, they're the same. I guess I should take that back. But yeah, very bearish look. So again, just want to see what happens. See what happens with the COT report, especially for the pound dollar, because it was pretty neutral rating. Kiwi dollar had a nice bearish rating. Okay, the banks favored the dollar over the Kiwi this most recent report. But again, it's 10 days old at this point. I want to get some updated. I want to get some fresh numbers today after the bell to see if I can use the COT report to my favor for the open of the next week, the Sunday. Which time frame? So I look at monthly, weekly, daily. Okay, I try to look at the confluences there for the higher time frame. But ultimately, I want to write a box, a rectangle around a daily time frame for my daily supplier demand zone. That's the first step. Okay. First step, daily supply in this example here. And then inside of that daily, I want to find a 4-hour supply. So you can see right here was a perfect example, an old example. We had a daily supply, and you see this old line, which I always change the colors when they've been mitigated or touched. But you got 2 sets of eyeballs on this particular spot in time. Oh, by the way, you had a little bit of a former support back here, which I would say that's probably more minor. That's really not that good a one, but it is one nevertheless, going right through the heart of that supply zone. It's all about finding where odds enhancers intersect. So I saw up here 4-hour. This was why I shorted this position. Okay, this was the one I shorted, because we had daily set of eyeballs and a 4-hour set of eyeballs. We had a nice bearish move out of that. Not, as you can see, the rest is history. It gave us our move. So daily for the first supply zone, demand zone. And then inside of that daily, I want to see a 4-hour. That's my favorite confluence in all the world. That's where me personally, I've had the most success, is daily 4-hour. And then once price enters that 4-hour, I'll go down into a 1-hour, a 15-minute, a 30-minute, 15-minute, just to see if I get some confirmations there where I start getting that confirmation entry, meaning it has to have a temporary uptrend to get to that supply zone on a smaller time frame. So now once it hits, I want to see a break of structure to the downside, or most of you would call it change of character, okay, where you're breaking that downward structure and then getting a retrace one more time to hit a newly created supply zone. So it's a little bit intricate, but again, that's what 12.5 years has done for me personally, guys. All the all the chart time. You start seeing patterns after a while. I've said it before, I'll say it again. Get your 10,000 hours of chart time out of the way as fast as possible, okay, to where you can start recognizing these basic patterns. And then once you figure it out, then it's good for about any asset as long as it's got liquidity. Okay, talk about supply and demand zones. So let's see, I went through that. Dollar CAD was on our list for a short time. It fell off, so it's neutral, but we'll take a look at it anyway. Again, the former supply that we had was real strong a couple times because it pushed price down here, went a little deeper, pushed price down here. And on the third time, this is why I don't like to reuse or mitigated zones. Third time it came up, pierced through it. So when we had that piercing action, well, okay, that's basically starts turning this into some flip zones. Do we have any possible flip zones here? And I see, and again, this is neutral right now, so I wouldn't trade this even if it came down to touch it. But I've got a daily and a 2-hour zone down here just kind of waiting. There's our daily demand, rather. And then inside of the daily, there was a 2-hour demand at the proximal line of the daily. So again, where does eyeballs intersect? Okay, where do eyeballs intersect? I think they intersect there, but it's a long ways away. We have just broken that overhead supply, like I said. So possibly look a little closer. I just don't like any of these pictures in here. No volume here. This is a mess. Yes, we have a gap, but the gap isn't the reason to trade. Okay? The gap is just a confirmation of the structure of the basing structure, which is nice, but there was no volume down here to back it up. Over here there was. You had your basing structure, and then on the leg out, you have a gap. You also have a yellow candle, above average volume, guys. And this isn't volume, your traditional volume. This is your tick volume, showing, hey, there were a lot of transactions that took place there. Okay. Again, if a bank's layering in their orders, they're trying to mask their orders. If they're trying to break this supply zone, because remember, it takes a lot of money to break supply and demand zones, swing highs and swing lows, support and resistance lines. If they're layering their order, and they have to do a lot of orders of small amounts, otherwise they're going to spook the market, or they're going to push market too fast, which they ended up doing, as evidenced by the above average volume and the fact they broke the structure. But they want to do as many orders as possible at small amounts. Okay, they can't put in $1 million order here, $5 million or $50 million order, because they'll get a terrible fill, price will fly up too fast, and they'll be buying along the way all through here. They don't want to do that. They want to concentrate their orders here. So that's just a little bit of understanding on how they have to kind of layer in their orders. Again, accumulate their orders, distribute if it's at the top and they're trying to push price down. So how do you know when we reach the 10,000 watching hours, man? When you get to the point to where you pull up a chart, any random chart, and you can just say, okay, I've got a demand zone here. Okay, I've got a supply zone here. There's a swing low. There's a double bottom. There's a break of structure right here where we broke structure. Okay, and then you can say, okay, well, the picture doesn't look the prettiest. What's a 6-hour look like? What's an 8-hour look like? Okay, you start playing around with time frames to see what gives you the prettiest picture. What about a 12-hour? What about a day? There you go, daily demand right here. Okay, it just gets to the point where you just start, the stuff it just becomes second nature. Okay, now I'm not saying that this is a strong daily demand by any means, but I'm just saying when you get to the point where you can pull up any random chart and that quickly you can find a zone. You can go through your list of, okay, did that zone give us a gap? Did it break a structure? Is there volume? Was the leg out strong? Did we have a yellow candle, a red candle, preferably? Is it low on the curve? Is it high on the curve? Okay, talking about curve analysis, swing low over here, swing high here, connect the dots. Where is my price? I'm in a premium price right now. Do I want to buy at expensive prices? Do I want to play in the middle, diddle in the middle where the retail traders tend to get chopped up? Or do I want to wait for a discount into the discount area and then look for my demand zones there? Okay, it takes time to get to that point. That's the stuff that nobody gets praised for. But we all have to go through that so that you can just instantly look at a chart. Now, the chart isn't the reason to take a trade. That's what the fundamentals are for. CNBC, Bloomberg, they don't talk about 5-minute moving average crossovers, or breaks of structure, or hell, even supply and demand zones at that time frame. Okay, they're too busy talking about the interest rates, the inflation numbers, the growth numbers, the labor data, the NFP that we just had on Friday, right? That's what they care about. So that's why Nick has put everything together. And like he said this morning, it's no surprise that 16 of these cells are devoted to fundamental readings. 2 for sentiment, talking about the relationship with smart money and dumb money. That's your confirmation. This is your why. Okay. From here to the right, this is the why to get into a trade. That is the reason to get into a trade. Now we need confirmation. What's the confirmation? It's seeing the relationship of the smart money and the dumb money. Are the banks in favor of where the fundamentals are leading? Great. Is the crowd going against it? Okay. Are they trying to take the other side because price is down and they're trying to catch a falling knife, or price is way up and they're trying to stop a rocket ship? Okay. Is that relationship favoring the fundamentals? Great. If so, then and only then is when we go to the charts to find a place to time the trade. So this is the why. This is the confirmation. This is the timing mechanism, the charts. Okay. So hope that makes sense. I got to get up out of here. My time has expired, ladies and gents. Have a wonderful Friday. Hope you learned something today. As always, holler if you ever need me at Trade Like a Tiger on all the socials, and I'll be happy to chat with you there. Other than that, we'll be back on Monday. So stay safe. Have a great weekend, everybody.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.